Hello and welcome to Payments Unfiltered. Our guest today is Natasha de Teran. Natasha is best known for being the co-author of the fantastic book on payments, The Payoff. She was also previously head of corporate affairs at Swift, and today is an honorary research fellow at the University of Warwick, as well as also sitting on the Bank of England's CBDC Engagement Forum. We'll be talking about the underlying mechanisms powering the payment ecosystem, whether they're fit for purpose, and ultimately, what does this mean for merchants? Let's dive into the conversation. Natasha, thanks so much for joining us. Maybe to kick us off, what do you think are the biggest pain points that merchants face in today's payments system?
That's a really good question. But firstly, thank you very much for inviting me to this podcast. It's particularly difficult to say because one sees it from one's own standpoint, and I'm a smaller merchant when I'm in answering this question. And as a smaller merchant, I'd say yes, there's cost, but probably the biggest thing is the delay, the settlement delay. Um, that can be really quite extended depending on which provider you're using. I would also say the lack of flexibility that we're seeing from some of the payment providers. So as a smaller merchant, you want to enable your customers to pay as easily as possible. So typically that they want to use their existing logins. So that will mean that you're locked into paying higher fees. So if I want to offer PayPal as an option, I automatically have to offer, for instance, Pay in 3 on those goods. I don't have the option not to offer that. So cost is an issue, but it's the delayed settlement above all that particularly, I probably it depends on your stage, the stage in your growth and what your cash flow looks like. But focusing at the growing end, cash flow is absolutely king, and you really do want that money in fast. But you also, it's not just that you want the money in fast, but you also don't want to be at risk to providers who, frankly, aren't your banks. You want, when your money arrives in your bank, it's there. You can keep it there and it's protected, or you can spend it. But when it's locked up in someone else's system, it's not entirely clear at all times who you're at risk to, nor how you'd be protected were the worst to happen. So the lack of transparency is tricky, and it's also very tricky. So when I choose a payment provider, I'm thinking of all the different things I could think about. But when you go payment shopping, you really have to delve to answer those questions. You sort of have to sign up and give away your firstborn in terms of information before you actually find out, what your settlement times would look like, or what the fees are going to be on non-UK issued cards, and all of those sort of problems, which are determined as to which payment provider you're going to choose or should be.
And you talked about flexibility. There's obviously a big rise in alternative payment methods, especially through the rise of innovation and fintech. So how should merchants think about alternatives and alternative alternative ways to pay? And is there a way that these alternatives can also overcome some of those problems that you just articulated?
I think there probably are. I think at the very small merchant end, there's lots of different alternatives, a huge amount of different alternatives. Some of them are stacked into your web provider if you're an e-commerce merchant. So you might build your platform and then find out that you haven't got a choice of payment provider. It's the one that comes with your web platform. Or you can try and connect something on the back of it, but your inventory will be separated from the payment process. So you've got to manually manage the inventory. So there is a lot of information, a lot of innovation. I think merchants should be looking all the time because everything's changing. Offers can be better, but you can't just retool your website. You can't just rebuild unless your e-commerce offering is very, very basic. I think in terms of customers, I mean, as a merchant, you want, as I said before, you want to make it as easy as possible for your customers to effect the payment. You don't want to lose them at checkout because they've lost the will to fill in their postcode for a third time, or because they're reluctant to give over personal information. They'd rather just use their login. I think what consumers are probably unaware of in using payment, different sort of payment gateways is the impact that has on the merchant. The additional cost that the merchant is faced with if you choose to pay with one payment method versus another. And I think that confused, or that lack of awareness in the consumer mind, spreads across quite a different number of things in payments, in terms of just protection, for instance. I think people who've had holiday problems probably know that they're better off paying with their credit card, or colour television didn't turn up when it was supposed to through an eBay purchase. But I think I would say, given the use of debit cards in this country, and given what I see on my own platform in terms of the use of debit cards instead of credit cards for relatively high value items, a lot of consumers are not using the protected payment method when they probably should be. So innovating or going down an innovative payment method is all well and good, but I think you have a responsibility as the merchant in terms of what you're offering, and does the consumer understand it, and is it the best way for them to pay?
That's a super interesting perspective. I've not heard many merchants actually consider so much around like the consumer protection, but I think that's absolutely a really important consideration. There are, in some other regions, some alternatives that are really thriving, that are kind of really challenging the kind of legacy payment rails, such as like cards via MasterCard and Visa. Two obvious ones are Pix in Brazil, UPI in India. Why do you think these alternatives are doing so well? And do you think that's a prelude for what's about to be coming globally? Or do you think those are exceptions to the rule?
Well, you said they disrupted the cards. Um, I think there's probably a little bit of challenge there in terms of cards widely used by the wealthier parts of those societies and tourists in those countries, absolutely. But was the majority of the population banked and using cards before? No. So Pix and UPI filled a void. They moved consumers away from cash and the system that they had in Brazil before, which was quite an interesting one, reliant on the post office, I think. So they sort of cut off the entry point, I think, to the situation we have in the UK, where the cards are rails, in effect, and those two governments, the public sectors in those countries, took quite dramatic, quite decisive steps to shape the future of their payments in a way that's probably slightly more complicated in Britain. In Britain, we have a system that works. There are issues with it. There's competition issues with it. There's cost issues with it, and I think there's a question of who's getting the profit issues with it. But we have a sort of different approach, I think, in Britain at the moment, to public sector intervention in what's seen as a private sector domain. But it's a tricky area, because payments are a public good. The payment system is a public good. The payment providers are not necessarily public goods. In Brazil and India, there's been a will to make them public goods, both the providers and the systems. And do you need that? Do you need public ownership to protect the public interest? Interesting question.
Well, have you ever seen it work without the regulator or the government taking more of a control over that kind of alternative payment solution?
Well, it seems that one sees things in Scandinavia. I think there is push from behind, from the public sector, but you see more positive movement from the private sector with the push from the public sector than we necessarily do. I think it's tricky when you have a very dispersed system as we have in the UK. We have big old banks, we have young new banks, we've got card providers, we've got lots of different things, and lots of different interests, and we've got antique legacy systems, and we've got snazzy new systems, and we have a different I think our banks, our financial sector has a different relationship with the public sector than it does in Scandinavia. And I mean, to be frank, they just seem to play nicer in Scandinavia uh, with each other. So have I seen evidence? Yes, I have. Is it transportable evidence? Can one say, it's worked in Denmark and Sweden and Norway, and they've done all sorts of things, therefore it can work here? I think there'd have to be quite a significant change for that to happen here. Otherwise, we'd have seen quite a lot of things happen here that haven't happened.
That makes sense. And so it sounds like in some areas, regulators are supporting innovation and helping to drive it. In other places, perhaps a bit more standoffish. Um, do you think these regulations help merchants? And if so, like, how do you see that manifesting?
Well, I think a lot of progress in payments, because it's a team sport and it's not a team playing industry, the payments industry. So, or the financial services industry. So, and in payments, there is some team playing, and I think that team playing is encouraged everywhere by the public sector. I think it's degrees of success. Uh, uh, that sort of varies from region to region, mirroring perhaps other societal behaviours that we have in different countries. But to merchant, I mean, we have seen regulations result in lower interchange fees, in more competition between acquirers and mobility on acquirer contracts with acquirers. We have seen drives from the regulators that have encouraged adoption of different payment methods, which have, in some cases, made the retailers' lives easier, in some cases, made them more expensive. In some cases, we've seen freedoms taken away from merchants. So, for instance, in Europe, I think under PSD2, merchants were disallowed from distinguishing, giving preferential pricing for one payment method versus another. Now, that might have been certainly in some parts of Europe. I think the motivation behind that might have been the tax take, that a lot of merchants were operating in cash and operating black on a lot of their revenues, and when you used to get into taxi in certain parts of Southern Europe, and it would cost you an awful lot more to take a card. And now all of them take cards, and it's the same price as cash. And we could argue that that's good. Tax take is visible. We could also say, well, what that means is whether I pay in cash or by card, it's the same. So I therefore don't use cash. But I'm paying for a taxi, paying the fees of a credit card, when actually I don't need the protection of a credit card. So that's all inbuilt into the price that I'm paying the taxi, and the taxi is paying for my protection through his interchange fee, and he doesn't need that either. So there's been a sort of card-based tax imposed right across the system, so that when you and I buy colour televisions or go on holiday, we get insured for that. And I on the one hand, there are some benefits. On the other hand, there's been some drawbacks. But I think a lot. I mean, I think everything the regulators do and the public sector does, I think, is designed for good. I would like to think. Whether the outcome is always as beneficial as they might hope is another matter. Now, if you take SEPA payments, so the SEPA regulation, which requires that all euro bank-to-bank payments are charged at the same cost, cross-border euro payments are charged at the same cost as intercountry payments are across Europe. Great fanfare, an awful lot of work. And I challenge you to find banks in Europe that actually will transfer your euros across border at the same cost as they do domestically. And you actually, as a consumer, or even as a merchant, you generally need to ask and very often quote the law at banks in order to get what the European Commission has spent an awful lot of time working on.
I think that's a really interesting point around, like, there's one thing having a policy and another one being able to police it effectively. Um, which brings me on to a very interesting topic around CBDC. So you're a member of the Bank of England's CBDC engagement forum. So I was wondering, maybe you could explain to the audience what CBDC is, and any thoughts on if what the impact could be on the payments landscape?
Well, I think we don't know what a CBDC is. I think a CBDC can be a different thing in a different place. And the impact it could have, if it has one, would presumably be designed by that state to fill a gap, present or future, in the existing payment system. That's the way I like to think about it, and I think that's the way the public sector is thinking about it. What isn't perfect or what won't be working perfectly in the future, and that's perfectly for businesses that we don't know about yet. Models of commerce that we don't know about yet. So, back when I was young, there would have been no purpose for PayPal, but PayPal enabled eBay, and it's enabled an awful lot of other things since. And what sort of payment system do we need for the future? And does that necessitate a public sector digital payment system and instrument like a CBDC, or doesn't it? And that's a really big question, which I think most countries are still trying to answer.
And do you think
And
that has
it's
to
an
be?
invidious task as well. I think it really is, because you're trying to, in the glare of the private sector and conspiracy theorists and all manner of other excitable media, you're trying to publicly design something for a future that's unclear with possibly public money.
And do you think if the digital currency, do you think without a central bank supporting it, driving it forward, defining it, monitoring it, making sure it's successful, do you think that's the only way that kind of digital currency ecosystem could work, or do you think that it could, there's this rise of stable coins at the moment. Do you think those through the private sector could be the answer in of themselves?
So if we think about what cash is a public sector provided public good, and it allows everybody to move value, to receive value, spend value, store value, imperfectly as it may be, but it does allow you to do all of those things. And then if we look at the digital sphere and ask, is the Bank of England ensuring that everybody in the UK, no matter whether they're in John O'Groats or they're in the Outer Hebrides, can they move digital money? Can they access, store, and receive digital money without charge, in the same way that they receive cash? Now, we can define what without charge means, and I think the answer to that is no. So then the question is, if you want to have a single payment system within your country, which I think we do, we want everyone to be able to exchange value with each other. That's a sort of basic, useful thing to have within a nation. Then does it necessitate a digital pound in this case, or can the same be achieved through another means? And that's where we need to get to. But what we need with that is that the poorest, who are always the least well served, and I think it's probably where the central banks need to worry the most. How can they ensure that the poorest, those less digitally able, those least appetizing, commercially viable customers, how can the public sector ensure that they can access, store, and receive money? And again, I think that on a risk-free basis. Now, risk-free as in they're not at risk to a provider that's not insured or protected by the bank in the same way that we have with the banks. Now, we have basic bank accounts in the UK, which in theory are accessible to everybody. I think in practice, so that even including those with bad credits, I think in practice there are instances where you can get refused. While there's still a bit of cash knocking around, you can argue that's not a problem. But in a society in which you need to spend to do anything, and to eat. If everybody, including those newly released from prison, can't store and receive and hold money, then they're going to steal again. You leave them no option but to do that. And so catering for all of those in a digital world does require the public sector to do something. Is it placing and who's it placing obligations on, and do they have the powers to place the obligations on those entities? And when we look at who's serving that economically unviable, in many cases, sector of the population, well, there are people doing it, and it is economically viable for them. But the result of it is that those very vulnerable individuals are paying the most per pound to spend a pound, which isn't really which is certainly not fair, it would seem, and not really in the national interest either. So is it the PSR, the FCA, the bank? How do they reach beyond their immediate purviews to ensure that can be the case? And then along with that sort of very tricky sector, which isn't a trivial part of it's certainly not a trivial consideration, but it's not a trivial part of the population, and it could grow at any time, of course. Then you also have the unappetizing businesses, perhaps from a risk standpoint or reputational standpoint, and risk is priced as you see the risk, but that can lead to some quite punitive charges, especially if you mix in the reputational risk with that. So if you don't have obligations throughout the payment stack, or throughout the payment mechanism stack, on providers to serve all kinds of people, all different religions, all different professions, including the eldest, then those people could be excluded from the single British payment system, pounds payment system, creating a layered system which would, I think, be detrimental to the movement of value and therefore the economy. So
It makes complete sense.
I don't think the question's been answered as to whether we do it or we don't. But I don't know that the three regulators, as mentioned, would have the powers, the existing powers, to solve for all of the problems that could be solved for by a digital pound.
And people talk a lot about the concerns around fraud and privacy, and how digital currencies are this kind of wild west, and they call it crypto and they assume it's all kind of the same thing. So how do you think that plays into this as a project as well, for any kind of public sector to kind of try and reason and tackle?
I think it's very difficult, but money's always had those issues when it comes to privacy. I don't think it's helped that some nations have moved faster than others on digital pound, and China in particular, which has a reputation for surveillance, and is seen as something as a bogeyman, and represented as such by parts of the media. So that's sort of helpful for those that would push out conspiracy theories. I think it plays well with the media. It gives you'll always find someone to complain louder than you'll find the complainers and the fearmongers will always play louder than the enthusiasts, particularly if, and certainly with the media, particularly if the enthusiasts are business interests behind it. Personally, I think it's a nonsense. I think you need to worry about your democracy and your judicial system and your legislature all the time, not because a digital pound is or isn't going to be there. And if those things are working properly, then there's nothing to worry about. I also find it, given that we have American giants with all of our data at the moment. So, when we're using Apple Pay or Google Pay as data, Visa and MasterCard, all of that data is seen and it's carried, it's there, it's probably accessible to the US government should it wish to have a look at it. So I think it's a great story, but I think it's a nonsense. I think if anything, what a public sector can do with digital currency is to put constraints around privacy that are not there, that haven't been built into the existing systems. And that could build confidence amongst those in the population who are fearful about privacy issues. So I think you could end up with that the most private instrument is provided by the state or the public sector with a digital instrument, and one could sacrifice amounts of privacy as one chose after that. But I also slightly, in this country, in the United Kingdom, I do slightly sort of wonder, given that we're on CCTV all the time and we're all wandering around with our phones, why would we be particularly worried about anything that could change with a digital pound? I think the abolition of cash, or the disappearance of cash, I suppose is a frightening prospect from that point of view. If certainly if you're engaged in illicit activities, that's worrying. And if you're worried about the direction of the state and the amount of control the state might have over you and your activities and freedom of speech and freedom of religion or otherwise, then that's a big issue. But I would again say, well, let's worry about the state. The legislature, the judiciary participate in that, and that's where you can really move the needle. Or whether the needle's going to be moved. I mean, it doesn't matter what you do in payments if the state's wrong.
Absolutely. And so it sounds like there's a lot of change being explored, being looked at, which I think's fair to say about fintech and payments over the last decade or so anyway. When you look ahead to the next decade, what emerging trends in payments do you think are most likely to redefine the global financial landscape over the next decade or two?
I do think this battle, this public-private battle, if you will, well, not battle, but discussion, questioning, because we've moved from, in my childhood, when it was banks and it was cash, to a system where the economy is really, really very dependent. The UK economy is hugely dependent on the card networks and on the digital movement of money. And the banks, the mechanic, individual banks matter, and some of them more than others in terms of, if one bank's payment system stopped, then the rest of the UK would start grinding pretty soon after. So that they're still central to things, but not as central as some others. If you think of some of the the plumbing layers, are really very fundamental to things. And I think there'll be much more thinking around that. Whether does that mean parallel systems and deep redundancy? I'm not sure. If the telecoms providers are all the same, you can build as many data centers and different pipes as you like. But if underneath it all is the same telecoms provider or grid, we are where we are. So I think it would be fascinating. I think it'll be competitive. I think we might see more differentiation in the way that we use different payment instruments in the future. And I would think that if relations between the US and Europe continue to deteriorate at the current pace, I think that move to strategic independence in Europe will gather steam. And maybe we'll see more efforts to gain strategic independence in payments across the world, not just from the US, but just from each other.
And then I imagine the impact on a merchant would be, well, now you need to reason about all of the differences in every country, and the trade-off would be complexity that the merchant would need to navigate. But that would be an interesting one.
Well, look, they already do need to navigate quite a lot of complexity. I don't know would that make it worse for them. Yeah. And we're all very keen on exports, and we're just not very keen on dependencies. And the problem with exports is that they create dependencies. So we sort of ignore that as our peril. If we want to export, then someone's got to do a currency conversion. There's got to be money flowing from A to B and back again. But yes, it could for the larger merchant. It could make things more complex. I think for the smaller one, it already is, and it's it's costly and it's time consuming. And SEPA payments are never made for free.
Yeah. And I think you touched on something quite interesting around like actually even the infrastructure layer. It needs to be a part of how we're considering payments in the future. Like I think, as you said, if a bank goes down, Barclays went down a couple of weeks ago for 48 hours, which is pretty crazy, and the economy kept running, although perhaps maybe less for Barclays customers. But if AWS went down for 48 hours, what would that impact be on the economy? And maybe that's actually where the focus would need to be.
Yeah. So I think looking deeper into, what are the strategic layers on which we have big dependencies, and how can what can you do about that? Can you eradicate them, or do you put all your eggs in one basket and sit on them? Do you require more of those layers in terms of, well, I mean, it could be in terms of how they behave, who they serve, what they charge, and who they interoperate with, and so forth, or in terms of what they build in terms of redundancy and resilience.
Amazing. And I'm very conscious of time, so maybe to wrap up on one interesting question for you. So you're obviously an expert in payments. You've written the Payoff a few years ago, which is an amazing book delving into all aspects of the payments ecosystem. But you're also a business owner, so I think you have a unique perspective to share with the audience, which is like, what guidance would you offer businesses when looking to navigate this kind of rapidly evolving payments space?
Oh, I think don't think it's gonna, don't think it's 5 minutes on Google. It's the first thing. It really is quite a labor of love. It takes quite a long time to disentangle who's offering what for what, and think about the flexibility that you want to build in. Are you going to want to sell in person as well as online? Does your payment provider how does it sit with your web platform? If you've got a web platform, how many of your customers are going to be foreign? So should you be looking at non-UK card payments, and how they charge? You're not going to have negotiating power, probably. You're probably not going to have anyone to speak to along your journey. So really think about how it is, what flexibilities you do. So what you might know what your business looks like on day one, but very few businesses look on day 50 the same as they looked on day one. So you look at that, try to understand it, focus on the things that matter to you. Is it making it as easy as possible for all customers, no matter what, and immunity to a higher interchange fee, and slower payouts, or is it faster payouts, and lower interchange fees that are more important to you? Can you use the same providers online, offline, and for remote payments, or are you going to have to add different ones? Is that going to be difficult? Inventory management, is there transportability of inventory management to the machine that you take to the market? If it's not, you're rekeying. That's fun, and you're managing your inventory manually. So that there's been huge innovations and great developments, and so on and so forth. But a lot of the providers that you might look at will have thought about a business and created their system for a business. And unless your business looks exactly like the business that they thought of when they developed it, you might have to shoehorn yourself in a bit. So that there's all of that to think about. And then going back to the payout terms, the settlement lag, who are you at risk to, and are you comfortable being at risk to whoever that is in the interim period? But it's not a trivial decision which payments provider you're going to go with, you might find that you're stuck with them for some period of time. And if you're e-commerce, then for goodness sake, find out what you can do with the web platform before you build your website.
Amazing. Well, Natasha, thank you so much for your time. It's been great speaking.
Not at all. Thank you. It's been fun.
That's a wrap for this episode of Payments Unfiltered. Thanks again to Natasha for joining us. If you found this conversation valuable, please subscribe to our podcast and share it with your network. We'll see you next time.